Hi everyone, my name is Liam Lusowitz, and today I'm here to talk to you about a documentary that I watched, and this is based off a true scenario about Collins Street Bakery. So a little bit about Collins Street Bakery. It was founded in 1896 as the first ever mail-ordered fruitcake delivery company in the United States. It was founded in Corsicana, Texas, by a German immigrant in about 125 years ago. Today, there are four locations in downtown Corsicana, in the outskirts of Corsicana, Lindale, and Waco. These are all about in the Dallas-Fort Worth area, if you're familiar with that. And between 2004 and 2013, something happened. $16 million were stolen from their books. Well, who initiated this fraud? What happened? Well, this was due to Sandy Jenkins. Sandy Jenkins was born and raised in Texas. He was a former accountant for Collins Street Bakery, and he made $50,000 per year. And just to remind you, this is $50,000 years ago, about 2 decades ago. Sandy Jenkins was often described as being a shy daydreamer who kept to himself. He would get jealous of other people in the office, and he felt that he deserved more. Well, all of this jealousy and all of this desire to have more ended up having him embezzle $16 million from the bakery. And all of a sudden, out of nowhere, he started living a lavish lifestyle that he had always dreamed of. And this included 223 trips on private jets to locations at a cost of $3.3 million, and he purchased 38 vehicles during the scheme of the fraud. And Sandy Jenkins was not alone. He had his wife, Sandy Jenkins, who also dreamed of this lavish lifestyle. But during the finding out of this fraud, um, Hay believed that her husband was not embezzling the money and had no idea that this was actually happening, as so she claimed. But she too started living this lavish lifestyle with her husband, and some of the list of items that she had consisted of 41 bracelets, 45 necklaces, 9 sets of pearls, 55 rings, a whole wine collection that was worth $50,000. So out of nowhere, she suddenly got this collection of lavish things that she had always dreamed of. So I find it hard to believe that she actually knew what was going on, but we'll talk about that later. So the timeline of this fraud was in 1998, Sandy was hired as the bakery's accountant. And in year 2000, Sandy was promoted to the controller at the bakery. So the controller basically oversaw all the other accountants within the bakery. In 2013, Sandy is released from his position in June under the suspicions of embezzlement. There were 7 different transactions that totaled 280 million or $280,000. So the company saw this as a suspicion, and he was fired. In 2014, Sandy was pleaded guilty and sentenced to 10 years in prison upon 1 count of mail fraud, 1 count of conspiracy to commit money laundering, 1 count of making a false statement to a financial institution. And on top of this, as I said before, Kay was pleaded guilty in May, and she was sentenced to 5 years of probation, so not even any jail time. And her account for was for a conspiracy to commit money laundering. So, how did Sandy get away with this fraud? Well, this is the process that Sandy took in order to commit the fraud. So, first, Sandy would print the checks to his personal credit card, and Sandy would void these checks in Collins Street Bakery's system. And then Sandy would create a second check for the same amount and then never mail it to the vendor that it was supposed to go to. And the result of this was his personal credit card was getting paid off by the bakery, but the general ledger was reflecting a payment to the designated vendor that Sandy was saying that it was going to. So this is a pretty crazy thing that he did. And the fact that he got away with doing this from 2004 to 2013 is pretty crazy. So when we're thinking about this fraud process, we have to think if we were in a situation or were to be suspicious of activity like this, how would we detect it or how would we prevent it? Well, these are the controls to preventing a fraud like this. First, we would hire someone to compare the cleared check pays to the general ledger. So we would make sure that the money that Sandy is supposed to be sending that so the money that Sandy is supposed to be sending to the vendors, we'd make sure that that matches the general ledger. And two, we would hire someone to compare the cleared check pays to the vendor name in the accounting system. Three, we would have multiple people viewing the bank statements to make sure that they reflect what's accurately in the financial statements. And four, we would compare profit margins over the years to make sure that Collins Street Bakery is going in the direction that it's supposed to be rather than receding and losing profit. But when looking at all of these controls, we can pretty much summarize that there needs to be some sort of segregation of duties. Sandy got away with this fraud because he was doing all of the work. If someone is doing all of the work, there is bound to be people that will take advantage of this. So with Collins Street Bakery, what they should have done prior to hiring Sandy, they should have delegated certain tasks for certain people to make sure that one person is reviewing the checks, reviewing where the money is actually going. And if this would have happened, then we would have been able to prevent this fraud potentially. So in conclusion, Collins Street Bakery was a prime example of a fraud driven by greed. Sandy and Kay were two individuals that had dreamed of a lavish lifestyle, and often this is a common theme with people that want to commit fraud. So when you're in an accounting position, it's good to be aware of people when you see them have sudden growth such as in the case with Sandy and Kay, where they all of a sudden start having all of these lavish things out of nowhere. So you have to have professional skepticism during this if you notice that something is just not right. On top of this, we need to make sure that there is a segregation of duties, as we already talked about, where we're not making sure Sandy is the only one making sure um, the money's going where it's supposed to. It's important to have segregation of duties in order to ensure that the money is going where it's supposed to go. And three, it's just important to do the right thing. As an accountant, you're held to a higher standard than other people because you are in charge of reporting the accuracy of the financial statements. So just do the right thing. And we're taking this class to learn how to do the right thing and how to prevent people from doing the wrong thing. So all I can say is just do the right thing and have a great day. Thank you.